In October 1999, Elon Musk founded an online financial services company called X.com. Just 5 months later, in early 2000, X.com merged with a company called Confinity, which ended up forming the well-known payments company PayPal. Now, just before PayPal went public in 2002, Elon Musk announced that he was preparing to step down from the company. While there were some internal disagreements at the firm, Elon Musk stated, "It's more interesting for me in the early stages of running a company where the concentration is all on developing the product. I'm not really interested in administration." Shortly after, in October of that same year, eBay purchased PayPal for $1.5 billion, and since Elon Musk remained the largest shareholder of the company, with an over 11% stake, this unlocked about $180 million of cash from the deal, which he later used, almost all of it, to start Tesla and SpaceX. Fast forward to 2015 when eBay decided to spin out PayPal from the company and let it trade as a standalone firm. This seemed to have allowed PayPal to rethink their stance on the unused domain of X.com, and on July 5, 2017, Elon Musk purchased the domain for an undisclosed amount, stating that he had no plans to use it, but it had great sentimental value to him. While the X.com domain has sat there for years with no business plan to make use of the valuable one-letter name, an idea has been circling the internet to merge all of Elon Musk's current companies, Tesla, SpaceX, Neuralink, and the Boring Company, into a single holding company called X, which would finally be a good way to make use of X.com as a portal to the Elon companies. Elon Musk has even commented on Twitter on how this may be a good idea. While this sounds like an excellent idea, as we've seen other technology companies recently create holding companies which are said to unlock value for shareholders, there appears to be at least one major issue with this potential plan that could lead to a financial failure for a large group of stakeholders. First off, each of Tesla, SpaceX, Neuralink, and the Boring Company has a different mission. The missions seem to be a key aspect of driving the company relentlessly forward in order to achieve the goal. It's possible that by combining these companies to form a conglomerate, they actually lose focus on their respective missions, as they might rely on financials from their sister companies to keep afloat. Elon Musk has historically lived very dangerously with Tesla and SpaceX, keeping them on the edge of bankruptcy and working ultra hard to make them successful. But even during stable times, Elon expects the same kind of employee motivation as if there's constantly an existential threat, but this could fade away if Tesla's strong cash flow allows for, say, Neuralink to sit back and relax. Tesla is already a bit of a conglomerate on its own, with Elon Musk thinking of it as roughly a dozen startups. In Tesla's case, from computer chips to AI to manufacturing, all of these pieces and more come together to help achieve Tesla's mission. Currently, vehicle deliveries is key, but going forward, rapid growth in stationary batteries and solar products will close the loop on Tesla's sustainability mission. While Tesla sells multiple different products, they mainly fall under the energy umbrella, which makes it less of a conglomerate in the traditional sense. Neuralink is focused on building a brain-machine interface, Boring Company on tackling traffic with underground tunnels, and SpaceX with making life multiplanetary. Combining these four completely different companies together will likely not have any real impact on the companies themselves, but may make it more complicated for investors to analyze and value each component. Investors tend to prefer pure plays as they are easier to research given fewer moving parts. With pure plays, investors can also diversify on their own. For example, if I think SpaceX will do terrible this year, but Boring Company will do amazing, then I can choose which of the stocks to invest in. But if all of my favorite innovative companies in brand new sectors are limited to a single conglomerate, I have only one choice. The companies inside this entity can perform well or poorly at different times depending on their respective cycles or product releases. So if Tesla knocks it out of the ballpark on electric vehicle deliveries, but SpaceX decides to lose money excessively as they invest into a new project, investors will be disappointed with the average, making an X holding company potentially very frustrating to own. This is an important consideration since I also believe that shareholders are more likely to be fans of the companies they own since they share in the benefits of the company's success. Now, one argument is that Google, for example, has successfully created the Alphabet holding company and restructured itself as a conglomerate, unlocking value for shareholders, and this is why Tesla and the other Elon companies should do the same. Now, Google was in an interesting situation where they had a growing division literally called Other Bets showing up in the company's financial statements where they would invest in new ideas or even other sectors and try to plant seeds to see if they would grow into something larger. However, this Other Bets moonshot division was basically mixed in with Google and was fairly opaque with regards to its constituents. By creating Alphabet, this actually added more transparency for investors by separating out these small companies within Google, assigning CEOs or leaders to manage them separately, and that increased focus as well. However, the Elon Musk companies don't seem to have this problem that Google did. Google made itself more organized and easier to understand. Actually, what they did was essentially break the company apart into smaller pieces, which made it more clear as to what was there. But creating an X holding company to merge together 4 separate companies almost seems like the exact opposite of what Google did. Elon's companies are already separate and transparent and focused. Putting them together doesn't unlock any value or help organize or improve any of these aspects. It may make things more complex. And before I continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. In fact, joining up Tesla, SpaceX, Neuralink, and the Boring Company appears to have limited synergies. Typically, the entire purpose of a merger is to try and make 1 + 1 = 3, where combining companies unlocks some additional value by leveraging each of the businesses to boost the other. For example, in 2010, Apple acquired a small company called Siri, which became their voice assistant. Of course, initially, Siri's private investors benefited immensely when Apple acquired them, but they integrated it across the platform to add value to Apple customers and shareholders by leveraging Siri's technology with Apple's vast user base and distribution. It was a win-win where Apple benefited by creating an entirely new valuable customer experience, and Siri has been able to reach so many people which otherwise likely would not have happened had this acquisition not taken place. Now, on the other hand, all of the Elon Musk companies can grow on their own just fine and scale on their own, so there aren't any real game-changing synergies by merging with Tesla. If there happens to be a shared product idea, the companies can already collaborate and share any monetary value, such as the initiative to add cold gas thrusters onto the new Tesla Roadster, which will likely be split financially between SpaceX and Tesla. The Elon Musk companies already share employee resources as well. An employee from SpaceX can go and help a team from Tesla, for instance, without any issue. It's already set up like this. Now, perhaps putting them all under one roof can ensure that it stays this way for the long term. That may be a benefit of X, but it's not a real synergy. There are no synergies either for marketing or distribution, at least not at this time, since none of the companies do any advertising, and they're still in the early stages of scaling their respective products. Elon already divides his time between the companies with the majority at Tesla and SpaceX, but the companies sort of run themselves. Combining them using a different financial structure obviously doesn't affect the location of physical buildings, so it wouldn't help Elon oversee the companies better than he already does. Even from Wall Street's perspective, which would benefit retail investors as well, a typical 1-hour conference call for the merged X company now needs to be divided into 4 parts, meaning 4 times fewer questions per company. Having one call may save time or money, but investors have less of an opportunity to learn about each company separately in real time from management. Individual analysts would also need to specialize in multiple different fields to be able to understand the entire company, which is unlikely, as investment firm ARK Invest has pointed out. They need multiple different analysts just to analyze Tesla, and other investment firms aren't structured this way. Therefore, Company X would simply be a widely misunderstood firm. Even Wall Street tends to dislike conglomerates since they are at times too complicated to analyze. Financial reporting may be more complex since consolidated statements need to be issued, while if the companies were separate, the financial statements don't need multiple or additional layers of breakdown and explanation. What if X decides not to break apart the financials, as there's no reason they need to? And again, all the eggs would be in one financial basket. Elon Musk wants to diversify humanity by populating other planets. However, along the same lines, if any black swan event happens to the X holding company, all the Elon Musk companies risk survival since they would all share the same balance sheet. Now, Gally from Hyperchange talks about leveraging Tesla's multi-billion-dollar balance sheet to finance the other companies. This isn't a bad idea. However, I think Neuralink, SpaceX, and Boring Company can get all the funding they need on their own, either through private investors, which they currently do, Elon Musk himself, who can sell Tesla shares and use the money to invest in these other companies, or IPOing to raise cash from public investors who can't wait to get a piece of these companies. Now, Hyperchange also brings up this idea of making Elon a dictator of the company using a dual-class voting structure where some shares are worth more than others. While I still think that any CEO still needs to be kept at least somewhat in check, and even Elon would want to make sure that it's still the best ideas that win, not just his own ideas, I don't think a dual-class voting system is always a good idea. I'd much rather prefer that my company's CEOs actually have to hold a higher dollar amount and therefore more shares if they want to have more voting rights, meaning all shares are equal in votes, and to get more votes, you need to have a higher stake in the company. The reason for this is to make sure decision makers have skin in the game. I like that all of their money is tied up in the company so that their decisions affect them just as much as it affects the other shareholders. Now, shifting gears, most importantly, I think much of the excitement and the upside of owning these individual Elon Musk companies is lost with a merger like this, putting them all into one stock, which would be a failure to retail investors who have a diverse range of interests even among these four companies. For example, let's say, hypothetically, you think the Boring Company can be worth $1 trillion one day, the same size as Tesla is today. But maybe the Boring Company could IPO only at, say, $5 billion. As an individual investor, this is great. You want to be able to buy it at $5 billion and participate in its growth all the way to that trillion. That would net a 200 times return, meaning investing just $1,000 would turn into $200,000. Of course, if that happens, but that would be massive for any retail investor. But now we have the same scenario, except the Boring Company has been merged with Tesla at the same $5 billion valuation, and Tesla is worth the same trillion. So investing $1,000 into the combined company effectively means you actually only own a little less than $5 worth of the Boring Company, or 0.5% of your investment, and about 99.5% of it is Tesla. There's no way to get more exposure to just the Boring Company if that's where your interests lie or if that's what you want to invest in. If the same scenario happens with the Boring Company grows to $1 trillion, which would be absolutely insane, a massive win, and a great call, normally, all else equal, your investment in the combined company would only increase from $1,000 to about $2,000, only a 100% gain. But that's compared to a 20,000% gain, which is what you could have had if the companies were separate. I think the biggest losers in a deal such as this would be the retail investors, because they won't be able to buy the companies they believe in while they're still small and independent, and participate in their future growth. Combining small companies with a massive company such as Tesla doesn't appear to actually add any value, it destroys value for investors. So while I don't believe that a merger of these Elon Musk companies makes sense for the aforementioned reasons, it's possible that it could make more sense down the road. For now, it appears that Elon wants to wait until they have positive cash flow coming into the company before doing an IPO. Of course, it would be nice to buy shares at the ground level while some of these companies are still losing money, but consistent positive cash flow is important so that the companies can be self-sustaining and won't be extremely dependent on their share prices to raise additional cash in the future. Elon Musk doesn't want a repeat of Tesla, where short sellers can take control over Tesla's destiny by crushing the stock price so that the firm can't do a secondary offering at a reasonable price if it needs to raise cash. And so waiting for positive cash flow helps to mitigate existential risk before letting these companies loose onto the public market. The benefits of this independence, however, would allow small retail investors to purchase stock once the Boring Company, Neuralink, or SpaceX go public and choose which and how much of the Elon Musk companies they want to own for the long term. So do you think combining the 4 Elon Musk companies into a single company is a good idea right now, or is it best to IPO them separately? Which do you think would create more value for the majority of shareholders, and which do you think would lead to a more exciting future? Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.